How you going?
Good to see you guys.
Good. Thanks everyone for joining us today. Just a little bit about what we're going to do. So this is the first of what's going to be a weekly discussion with the company, and we chose our good mate Vince first to go. So obviously AVL is one of our favorites here at 180 Markets, but we've called it Off the Charts, and basically we know a lot of people look at the charts and the technicals and the short-term movements, but we thought it would be good to get a weekly one of these where we discuss fundamentals and just get a bit closer into the company and the people involved. And yeah, I think it's a great way to understand the company. And you may not be convinced that you want to buy something now or sell something if you own it, but you'll learn a lot more about the companies and the future announcements that you've got to watch out for and the news that's coming. And yeah, so it's a great way to educate yourself.
Exactly. And what better way to start out with somebody that is delivering on their promises? We know that can't always be said, Vincent, with small capitalization companies, but you have delivered so far, and that's great. And, with that, Vincent, maybe if you could just back up for a second and just tell everybody about, the last year, the company has been, it's nothing short of transformational. It's obviously reflective in your share price. But what have you seen over the last year, in your mind?
Yeah, I think, Greg, thanks for the opportunity, guys, and good to be with you guys again. And hopefully a few investors that are on the call benefited from the last couple of months and the year or two with the two raisings you've done with you in the past. So, look, I think in terms of transformational, it's always difficult when you're giving birth to something of this size and scale. There are not many of these projects in the world. So, there's only 3 operating mines of this type in the world. And that's sort of, when you look at it on the face of it, a big challenge to try and meet. But the world's sort of gone through a couple of ructions over the last couple of years, and that's it could have gone, the wrong way for everybody. And I think a lot of the resource companies, especially with the transformation of societal transformation around green metals and so on, has been very, very helpful for AVL, and it's been helpful for a lot of other companies. But I think that for us, it's been about nose to the grindstone sort of stuff. And I know that's a bit painful at times for people. That can be a little bit painful at times when you've got transformational. That's okay.
Sorry, hang on.
Yeah, Greg, I answered
Okay.
for you.
Okay.
Sorry. Okay.
It can be transformational. It can be, disruptive to have to get all those things done, and it can, sometimes take a little time for the companies to get this done. But the investors need to understand that in the resource space, things can go really quickly and then they can go really slowly for a time in between. But no one in these companies, and myself included and my team, and a lot of the other companies you might invest in, you just know that the guys are really working hard. All the junior companies work really, really hard at what they do. It might not look like it sometimes from the outside, but normally it's it's the old duck on the water, right? You'll see a company doing something, it looks like they're not putting anything out, but in the backyard, someone is working hard, trying to get those results out, trying to make that discovery, trying to finish that study. And that's really where we've been coming from. So for us, it's been a good year in that sense, because we've made some fundamental changes. We brought some good people onto the board that have got some great firepower and some good credibility, and we've done good work as well. And look, the markets have been kind to us, and we've also seen those changes starting to bear fruit. So we're looking forward to the next years ahead.
Yeah. And Vincent, there's obviously, I suppose, that the most recent announcement is your new funding. Can you just talk about that a little bit? And also maybe, again, you alluded to that there's a lot of hard work behind the scenes. What did it take to get that grant?
Yeah, look, so we've got a very good team. We work with the team at EY here in Perth. They have been working with us for 5 or 6 years on our every year we do an R&D tax claim. So they understand us well. They understand our business model and our research. And research is a fundamental part of what we do, as part of both on the geology side and on the processing side. Always trying to innovate and cut that edge. And then the Australian government's got a great system in place for that. So on the back of that, we've already won 2 previous grants in recent times. Those previous grants have set us up effectively for this one. And when it came time and that application became a possibility, the board approved us to put quite a lot of effort into it. It was a big application, but it had a big prize, and we thought, well, let's put the effort in. Our EY team, along with our technical team here in the office, really knuckled down. We got a lot of letters of support from around the world, partners and so on. But it was a big effort, right? It was a significant effort in time and some money. It cost us about 150 odd grand to put that in. But if you look at return on that 150 grand, not only do we get a $49 million grant, which really sets us up to move to the next level. But that effort actually solidified a lot of other things we needed to be done anyway for the upcoming financing of the whole project, including cost models, policies and ESG policies, and then setting out our renewable objectives in terms of moving towards net zero on the project. All of those are critical things when it comes to funding for these big projects.
So Vince, I know you haven't released the BFS yet, but is that still roughly going to be about a quarter of the cash needed?
Look, it's a big chunk, if I can put it that way.
Right.
Sean, it's a big chunk, and it makes a big dent in the equity return. So
yeah,
if you apply it overall, obviously knocking 50 off a 500 or 600 number is going to be a big number, right? In terms of Aussie, that's still a big percentage. If you apply it only to the equity portion, assuming you're going to get, say, 50 or 60% of debt on this thing, it generates a lot of cash flow when it's in full production. So you apply it to the equity portion. So a shareholder has basically got the government come in, not as a shareholder, but they've given money to make the project stop. That's what they're there for. These projects are hard to fund in some ways because they're rare earth projects, or they effectively fall into the same bucket as rare earth projects. They're not they're not easy to get over the line with some of the banks because they don't have price discovery on the commodity. So the traditional banks look at these things and go, oh, we don't know anything about this commodity. Lithium is the same, rare earths, cobalt, all of these things. Vanadium sits in that space. They say they can't be sure of the pricing, so they need confirmed offtake, and they also want to be able to see how they're going to get going. So this sort of funding that the government's put forward, despite some criticism from outside parties, it's what's needed for these projects to get off in Australia, to establish those supply chain controls. And that's why they gave it to a nickel cobalt company, to a rare earth company, and a vanadium company, because those industries that get developed are going to be generational. They're not just one-off things that happen for a 5-year gold mine, right? These things are going to be there for many, many years, and that's where we fit in. So this chunk of injection of funding pushes our equity returns up significantly higher from where we would be before, and that's a benefit for the shareholders, right?
Yep.
Yeah, if it's and obviously for anyone that's interested, it's a simple mathematical calculation. You're putting up less equity, the returns go up dramatically. But also, it's just to drill down. You said for the BFS that this is critical as well. So now, does it make it those discussions with bankers and financiers? Will it just become so much easier that they see this grant behind the company?
Well, I think the proponent of the grant is the main gear, right? So you've now got the Australian government putting in, saying, okay, we've looked at this thing in some detail, and we didn't do it's not a 5-page document, right? This is a few 100-page document we've put in. They've dragged it through their various independent auditors and other things, and they've looked at it and said, okay, well, we'll give this one a go. And on the back of that, you've now got the Australian government in that position saying, let's get this going. And that helps tremendously with any discussion. Right.
Got it. Just turning it a little bit now, Vince, maybe do you have a presentation available?
Yeah, I've got a few slides here. We can run through a few.
Yeah, I think it'd be really helpful just to visualize and see what exactly is going on.
And then we'll open up the floor after that for questions.
Yeah, and I'll just hit a few high points. I'll try not to dwell on a few things. I might jump around a bit. I've got a lot of slides here, so I won't stick on too many. I might just cherry pick a little bit for the people out there.
Video. I think he's okay too.
Can I share?
Are you good to share your screen?
Small panels.
Yep. Just hang on 1 sec. I'm just going
Going
to
into the screen.
just hang on 1 second. I'm just going to move this away. I've had a few issues with Zoom and sharing on this machine, so hopefully we don't experience those today.
Okay.
How does that look?
Yeah, it's starting. Well done.
All right, let's hope it doesn't jump around too much. So I'm just going to get in here and go. Okay, cool. There's nothing in this presentation that is not out there in the market anyway, just in terms of in one shape or form. It's not, the presentation is not itself is not on the ASX, but most of the content is in previous presentations and in ASX announcements. So I've just updated this just a few minutes ago, actually, just because I thought it was out of date with the market cap. The chart is not up to date because that chart should run up to just under 6 cents or 5.5 cents. Stock obviously responded very well to the grant, and then the subsequent announcement of a second letter of intent for our byproduct, which is really important. The good thing about this is it moves the market cap of the company into a zone where we're getting significant interest from institutional level shareholders and others, which helps us in our quest to get funding. The register of this company is very open. You can see the top 20 only holds about 25% of the company in there. And that makes for good trading. The updated daily traded volume there is not 11.7 anymore. If you look at the traded volumes over the last few days, been quite significant. Yeah, just a quick look at the team. Most importantly, we've got a team, and that team is Vanadium focused. A lot of experience in not only corporate markets, both small and large. Cliff and Les having operated on either end of those for a long period of time and very good at them. Daniel and Todd, excellent operators in terms of the vanadium space. I fill in the geology, and Lisa's come on board as our CFO and is providing fantastic support to the company and the board. Back in the back office, two brilliant engineers there, Greg and Trevor, and our very experienced principal geos, Tony and Gemma. Ashley's joined us. He's got a very wide range of experience, right from processing all the way through to geology. And Sam is running our Vincent entity and does a fantastic job of controlling the marketing. This slide is getting quite busy now in terms of our focus. HCF, our debt advisors out of London. And then on the bottom here, our flow battery partners, E22, CellCube, and VFlow Tech. There's a lot of people got into the work that we've been doing recently. Just a quick summary of that grant. Again, we've talked about it. It is a collaboration grant, so it makes an assumption that 2 sets of collaboration work will go on, and those are part of our milestones. I was asked yesterday, how does the payments of these grants work? Well, they're based on milestones. So we set up a series of milestones. The government agrees with those milestones, and then we meet those milestones by delivering certain activities and actions. And that's how the grant structure works. Some of those milestones are related, in our case, to a green hydrogen delivery strategy, and we partnered with ATCO on there to help us deliver hydrogen gas to the refinery or the processing plant, where we'll include it in our gas stream for the roaster, and thereby reducing our overall footprint of that roaster. That's an experimental exercise with ATCO, and it'll be an offtake agreement with them to take all their hydrogen from their new ARENA-funded plant. And that'll then grow as the supply of hydrogen in that area grows, and we can consume more hydrogen in our project and hence reduce our footprint. That's very important for funding, by the way, because ESG funding around green credentials are very important these days. And obviously the other side, and the listeners here will also know about Briar Resources, who've done some work with 180 before. Briar have a significant resource of nickel, copper. AVL holds the cobalt rights from the tailing stream of the AVL project. So when we take the vanadium and we upgrade the concentrate, we send out a tailing stream, which is a fine silica-rich stream. In there is a sulfide component. That sulfide component has a 1-to-1 nickel cobalt credit, which we're able to recover. And Briar will significantly benefit from this collaboration by what we do in the future, and is by the way significantly undervalued because of that, in spite of that credit. Just a quick look at the markets. What is vanadium used for? It is a steel component. That is its primary use. It's made in China. 60% of the vanadium is made in China and used in China, but it drives demand. And when the Chinese economy is growing, the vanadium consumption is growing with it. But elsewhere in the world, and more recently, the Western world, Europe and North America, use a lot of vanadium on their own. They probably account for about 30% of the rest of the vanadium use in the world in terms of consumption. But they get a lot of their vanadium from South Africa and Russia. So there's an interesting segue there on, will the Russian supply be able to be absorbed into Europe, or where will it go, and or will it stop entirely? So that is having an effect on the price today, because there's about 10% of the market coming from the Russian suppliers through Evraz, which is now in a sort of a backward movement. Obviously, the chemical aerospace market is booming, going to be booming again. Jet engine, turbine blades, other aerospace applications, but also some military applications in there as well. Chemical uses in acid catalysts. And then our most exciting area and the biggest growth potential is the use of vanadium in energy storage. And really, that's a large part of the story for AVL, is how this market grows. And we're very interested in making that market grow significantly. I'll just skip this slide. It's just to produce a slide. But the vanadium price is quite a volatile beast up to date. But going forward, we're seeing a very large opportunity for AVL in stabilizing this price in that $5 to $10 range, or sorry, yeah, $5 to $10 range for the longer term, where we can significantly benefit from a low operating cost and generate the cash flows we expect. Just for reference, if we our competitor Largo Resources out of Brazil, listed on TSX, just put out their annual figures. They had a pretty good year, not the best year, but they had a pretty good year. If investors want to go and look at their annual figures, you can get some idea of what a fully operational AVL will look like in terms of what their cash flow generation is like over time. You know, and that's really, they produce about the same amount as we plan to produce. So, and we can probably do it at a similar cost to them. So it's worth having a look at Largo in your independent research. This is the growth curve. You can see that growth from steel is relatively modest, but growth from the battery market is predicted to outstrip it and cause a disruption in that market.
Hey, Vincent, just a quick question. So is Largo, in your mind, even though it's listed in Toronto, a true comparable?
Yes,
Okay.
absolutely. Comparable in most ways. They have a slightly higher concentrate grade, but their operating cost, yeah, it's the best comparison, because it's what we've been basing our own work on. We need to get to where Largo is in terms of a competitor.
Got it.
And that's our target market. Our sizing is very similar. There were some differences, but generally, if we can get ourselves to a position where we can operate in a Largo-like fashion, we'll be doing very well.
Got it.
We can also, when they started up, they made a few mistakes at startup, and we've obviously also spent our time learning from those things, and we don't want to do those things either. So it's good to have a comparison. So we've got some offtake, a lot of work to do on the offtake side, but with the BFS released, we'll be able to really lock in some of these. Focus is non-Chinese offtake, and also starting to lock in offtake with the flow battery manufacturers. They need security of supply as they grow. The co-product we mentioned, this is a differentiator for AVL. We'll be making a crushed pellet. This is our pellet. The top one is the thing we call a green pellet, and then we roast it and turns into that pellet on the right-hand side. And then when we finish that, we bring it out and we crush it, and that's the iron titanium product after we've taken the vanadium out. So that's our iron titanium co-product. It's a 55% Fe product. It has a very specific destination and a very specific market, and we've already started to lock it in. It's a really key part of our strategy, and it is a totally differentiating strategy for AVL because of the location of the project we've decided to use. So just looking at that, that's really critical. Understanding the geography of our project. Where is it? The mine and the concentrator are located up near Meekatharra in Western Australia. That's a very remote location, and it's got no gas available. So we decided in our second PFS that it was economically viable to move the gas, move our processing plant, which is gas hungry, closer to the gas itself. And that's 180 kilometers of new gas we would have to put in if we put it into the processing plant, sorry, to the concentrator. And we decided that that was a hurdle that we didn't want to meet. So we've got a 20-kilometer pipeline down here at the processing plant. A lot of opportunities open up by moving that down, including the processing plant can outlive the mine. In other words, other other resources can be processed through that processing plant. So if you imagine our resources currently sit at 25 years in terms of what we can mine in this iteration, we've got about another 10 or 15 million tons that we haven't accounted for, are still inferred resources that we can bring in. So let's call that another 4 or 5 years of mining. And then we've got other resources in the region that we can take advantage of and put through this processing plant over time. But now we're talking 25, 30, 35, 40 years. And that is the lifespan of one of these processing plants. We're not going to build it for 5 years. It's going to be built for a long time. Being close to the coast is a significant benefit and also allows us to add the byproduct credit to the project, which makes us totally unique on a global level. The port, the city of Geraldton, the people, the staff, the access to gas, water, power, renewable energy, hydrogen, all that sort of stuff comes in really helpful by being there. These metrics will be updated and I won't dwell on them, but the left-hand side pretty much outlines our resource setup. Those are going to be static. Our byproduct is static. We will be updating, obviously, our CapEx and OpEx in the coming weeks and months while we get this thing done. So what are our differentiators? We've got a very good ore body globally. You can see this picture, it's very clean, and that's really beneficial. The way we've chosen to mine it and process it will give us a clean concentrate, and therefore we can optimize our recovery. Good status with the federal and state governments. Obviously, the good grant can show that we can extend that good status with them. We've got a very embedded ESG focus for the bankers and other investors who have a good view on those things to bring into place. And we're in one of the best, excuse me, one of the most attractive jurisdictions from a mining point of view in the world. And we think that that's very much to our benefit. I think people have seen these geology slides, so I won't dwell on them, but just gives you an idea of the scale of our project and our setup. Just a couple of pics here that are relatively new. Our layout, you can see the processing concentrate plant well located in the center there. Some diagrams of our future work is what the ore body looks like in the pits. We've got a lot more vanadium than that. We're just processing the high grade portion of it. And our two plants. There'll be some good pictures coming out later on with our BFS of our new renderings of the plant itself. Just quickly on this in terms of strategy, we're very interested in vertical integration of this process. So not only we're producing a high quality material for from the processing plant in terms of a high grade vanadium product, but that allows us to immediately involve that in the battery space. So vanadium electrolyte and vanadium battery manufacturing and sales really require you to have high quality vanadium. And we can do this from the get-go. We think we've got a vertically integrated process. And again, I refer, excuse me, again, I refer to Largo Resources and their new strategy about involving the battery side of things. So we're not alone in that sense. So where are we going this year? Finalizing the BFS is our ongoing priority, and then working on both equity and debt engagement so we can start locking in those numbers. Finalizing our offtake agreements and getting our approvals all lined up so we can get on with it. We're building a vanadium electrolyte plant this year as well. That is a commercial plant. We'll be building with a separate grant down at Kwinana to about 33 megawatt hours. And that starts to embed that vertical integration and ability to deliver the vanadium flow batteries into a growing market. Obviously, from there, once we get to a financial investment decision, and we can then start to move on locking in our partner decision and moving through to the EPC and construction startup. Now, it's a tough market, I have to admit. We've got a global environment for a very unstable geopolitical environment right now. COVID's got lingering effects in terms of economics and movement, and there's definitely issues around inflation around the world. So we're coming into this in a very tough market, but on the upside, we've got a very, very positive market for the vanadium product itself around the world, and very, very strong upside on the battery uptake around the world. USV, our partners in the US, have just built an electrolyte plant. In fact, there it is, my next slide. They've just built the plant in Arkansas. We're going to be building an identical plant to that in Kwinana this year. And that'll allow us to start to feed vanadium flow battery delivery into Western Australia. And that plant is totally replicable. We have an agreement with USV that is exclusive for this technology, and will allow us for Australia and New Zealand to build multiple of these around the country as we look at local delivery of vanadium electrolyte into a growing market. So work's been underway already with that for some time, and post our BFS for the main project, this will become a focus of our news flow. So keep an eye on that for everybody. Yeah, so we're in a space now. I'll just leave it at that. We've got a very good team. We want to be growing that team as we move to the next phase. The project is good timing. The timing is well suited to the market and the growth. The project, as you said, it's very robust technically, both on the geological and the processing side. And we think that the integration across multiple regions is perfect for what we're going to do. So we're just going to move on from here and just keep kicking on and fight our battles and make sure we can bring our timelines in from here. And I think the funding that you've seen, the funding that 180 Markets has helped us to get here, has been very, very worthwhile. So I appreciate the team's work to get us to this point, and we'll kick on from here with our work ahead. Thanks.
Hey, Vincent, thank you so much. Quick question, just with all the political unrest and so forth, and the fact that your project is in Australia, anecdotally, are you seeing a lot more interest just as far as people looking for more secure or geographically desirable places to source product?
In terms of sorry, I mean from the vanadium point of view.
Yeah.
Yeah, look, absolutely. I think, but that's been an ongoing issue even before the Russian crisis here. I called it the Russian crisis. Apparently, I shouldn't call it that. It's the Ukrainian crisis, but I think it's still a Russian crisis because Russia provides a lot of. It's a crisis generally. Russia provides a lot of raw materials. We've seen it in the nickel market, and it affects a lot of markets out there. So I think it is a crisis that they bring into being. Yes, I think it highlights the point that supply chains are at risk, both from being very heavily biased towards China, Russia. Now you can add Russia to that mixture, right? So when you've got those two things in play, and you want to avoid concentration of supply chains out of your geopolitical space or comfort zone, if you like, there is definitely opportunities to deal with Australia on a number of different fronts. So I think we've got to kick up resource discovery in multiple commodities. We've already got to push up the discovery and approval process here in Australia so we can start adding to those. And that includes a range of commodities, including vanadium.
Yeah. Then something a lot of people are asking is, in order to get the bigger funding for the project, has a consolidation been talked about?
With who?
From investors to you guys. Is like a consolidation something you'd consider?
Oh, a stock consolidation.
Yeah.
Yeah, it's a tricky one. I mean, I think most investors don't mind the fact that the volume is there and the stock can move.
Yeah,
it is a tricky one, Sean, and it's one that always is on the lips of people around us inside, and we always consider it. But I think it's always a tricky thing when you're actually trying to get stuff done. And there's good movement in the stock. It's a tradable stock. People like it that way. And I think we'll just keep moving until we find a compelling reason to do otherwise.
Yeah, we definitely think it's not a great idea, but yeah. Now, Vince, I'm going to ask you a hard question. Given where the stock is now, it's pretty close to all-time high. I mean, it's not all-time, but it's back to the high since 2018. Would you buy the stock now?
Of course I would.
Okay, good.
No, absolutely. No, I think we've got a way to go there. There's you've got to look at the value. Just look at, again, I come back to Largo, because if people look at the share price of Largo going back 10 years, right, and look at the journey that they've been on. Now, they've had a pretty rocky road getting into this, because they started off their project delivery in a bit of a bumpy way. They had a market crash. The market was sub $5. They had a good ore body, really good ore body. They messed up a bit on the initial estimate of how their plant would work, mainly because they underestimated the weathering of their ore body, even though it's in Brazil. You can't underestimate, these deposits have been lying around for 2.5 billion years, right? So Largo's early mistake was that they underestimated the amount of oxidation in their ore body, and as a result, they had very low yields, and that cost them another $200 or $300 million in capital after the one that they started with. So if you look at it after that, they did a very good deal with Glencore. It was very much in Glencore's favor for offtake. But if you look at their stock price from that point on and where they sit today, they're a $1 billion+ Canadian company, right? So $1 billion astrology company, starting at the same levels as where we were. So there's a story there that if you look at their latest financials, strong financials. So there's absolutely a story there for us to follow. We believe the ore body can deliver it the same way. We've got much lower operating cost opportunities here, stable environment. We're much closer to the coast. We've been able to put it together. So for us, if we can get even close to what they're delivering today, then I think that then the stock price is massively undervalued for where it sits right now. But then again, I'm somewhat biased, so I can't really be asked that question, Sean.
No, of course, I understand. I mean, I think it ran in 2018 based solely on the vanadium price. So it was quick up and quick down, which
But fundamentally, so much further along.
fundamentally, the company is completely different now.
Yeah, look, and that's where we've been, we've been there to build we play a long game. It's a longer race. That's what we're here for.
I think we'd have a lot of fun if the vanadium price went back to those levels.
Your share price would triple.
Well, that's possible in the short term. Once it gets, once the price actually goes past these levels, where it is now $13, it does run a bit harder and probably goes up to the $18, $19 before it starts to pare back, because it starts to, it pushes right past its limit often. Once it runs into a new space, and that's because there's a market supply-demand imbalance, and it has to pull that back into line. And that normally takes 6 to 12 months. And given that we've just crossed into that threshold from January, and we're only in April, we can see that running for a while. And the Russian crisis is not helping that, because we've effectively taken 10,000 tons or thereabouts out of a 110,000 ton market. And we're doing that probably for a long time, not just for a short time.
Vince, another question that people are asking us is, they know that the company needs funding. They don't know if it's going to be equity or debt, but a few of them are saying, why should they buy the stock now when they can probably get into a capital raise in the medium term?
That's always a risk that they can take. I think the demand will be very high, and it'll be an institutional buy. We know that you guys, we had that discussion before. These are institutional opportunities when they come up. And they also
we could do the whole raise, Vince.
Oh, of course, yes. Of course. Sorry,
same price as last time.
I think some of your shareholders are holding my options, which were at the same price as last time.
Yes, yeah, correct.
If I'm not mistaken. So hopefully they can take advantage of that. And that is something I mean to say on this. It looks like there's a good opportunity in those options. They're only running for a couple of months now. So we have had some option exercising calls in the last few days, as you can imagine. So if any one of your investors is sitting on some of those, maybe now's a good time to take advantage of that. And
you want the money, I think.
Yeah.
So I think the question is, you might think that that's possible, but we don't know where that form will be, right? So it's very tricky to sit and think that you're going to get in line for that. As a shareholder, you will get something along the way. We're never going to leave our shareholders out of things, not at this stage. But if you're not a shareholder, I wouldn't be waiting in line.
And Vincent, and the BFS is in your mind, is that the big catalyst for 2022?
It's sort of it's a stepping stone, Greg. I'm not sitting on it going, it's the one thing that will move me one way or the other.
Oh, sure.
It's basically it's a stepping stone on my side to get the rest of my stuff done. You know, I really want to go. The most exciting things for me are to lock in definitive offtake for the company. That's going to be one of the key things, because that's where the bank guys want to see. So those are the big hurdles for me, and the locking in a good offtake agreement is really where we want to be here. I think the study for me is just a pathway to getting it done. We've done the work. We now got to just illustrate that work to the market and go and sell the project to everybody.
Okay, and also on an offtake, is the offtake agreements generally more with trading places or end users? Can you talk about that at all?
It's a combination, Greg. You end up negotiating with competitors. You know, literally, like Algar, Glencore. Those are people that will buy your stuff from you, even though they produce it themselves.
Sure.
So there's end users, which are right down to the individual mills. Other producers in China also, you know, where we've got major users are knocking on doors. New users, traders. Traders tend to not want to do good offtake agreements because they just want to say we'll sell it for you, which is different from actually saying we'll buy it off you and sell it later. It's a different. That's a different thing. And then there's individual customer relationships that we'll develop with end users ourselves. So there's a mixture of things in there that we will try and do. And some off-takers will want to invest. So there's that cornerstone thing. Sean, answering your other question, is that when you're in that negotiation processes, you might get a cornerstone knock on the door. And they want that definitive view, and the government grant also puts us in the right spectrum for that. They know that this project is going to go, so now they'll be more comfortable to make that call.
Right.
Gavin, so we've opened up the floor now to questions. So if anyone else wants to ask a question, please either raise your hand or type in the Q&A below. So a question from Patrick. TMT is situated right next to AVL's project site. Is there any discussions with them around co-processing there or M&A?
Good question, Patrick. Look, they're neighbors. They're also competitors, so that always has a thing. We're very, very small market. We're not gold miners or nickel miners that are in the same space. So the competitive situation is very different. We have plenty of ore of our own. We don't necessarily need any more ore. If we did have any more ore, we'd have to value it at the end of our processing life. So if you know anything about discounted cash flows, I would value any ore from TMT at the end of my project life, so around year 25 or year 30, which wouldn't give it much value in my sense. And they would do the same if they were looking at my ore. So at the moment, we're proceeding on our own independent paths with a good neighborly view about that. What the future holds, I don't know. But certainly, if that opportunity came up in the right context, the right value for AVL shareholders, it would certainly, we'd sit down and have a chat about it.
Hey, Vincent, someone's just given me a question. In your mind, what is the biggest risk from a delivery point of view for AVL over the next couple of years?
There's two risks at the moment in terms of timing risk. They're not risks as in not being able to deliver. Obviously, funding risk is always going to be there, and the world falls apart, and someone drops a nuke on something, and then we're all fucked anyway. So you can't do much about that. But in terms of delivery risk for us in our world, it's the timing of approvals and red, green, and other tape that we might encounter. Now, I think there's the grant itself plus our work in government here on the lead agency status. We see a lot of goodwill on making those things work. However, the agencies that are involved, particularly at state levels, can sometimes inhibit delivery of timetables. So approval is always going to be a problem in Australia in terms of that, but we make sure we put manpower behind that and expertise to make it work. The other delivery issue is around the supply chain of equipment, like large gear. Where do we get this gear from? Sorry, I'm not looking in the camera here. Where do we get gear from? How long does that gear take to get to us? And is the price of that gear reasonable? So we're talking, large pieces of equipment here that have to come from around the world. that is, I think, the key thing right now for all, not just for AVL, for every project trying to be delivered in the world, is can we get reasonably priced large equipment, mills, roasters, crushers, piping, things that you would have a year and a half ago, you would have thought were just straightforward. These things are not straightforward anymore. And their delivery timetables are out of sight. So, and their pricing is really, really strange right now and volatile. So those are, I think, the biggest risk we have is to deal with that. There are ways of doing that, by the way, and one of those is to engage with your end. We call it, the engineering guys call it early contractor engagement or early contractor involvement, where you select your end player. You probably pay a slight premium for doing so, but you select your partner, your engineering partner, for delivery of that equipment early on. And that's the way you form a relationship. It's almost like a joint venture, but it's not quite. It's like, okay, I want you to do this. You work on the things together, you form relationships, and with those relationships, you can bring those timelines together. And that's one of our strategies we'll be using to get around these difficult times. And in the delivery timetable, 1 to 2 years of this project, we will be looking at a better at a way of bringing those things in. And also, we think that those things will improve over time. This is a crisis that we're going through globally. COVID will wane. China will become less constrained by its own capabilities, and the Russian thing will either subdue or end quickly.
Okay. About wrap it up now. Vincent, do you have any closing remarks for everybody?
No, thanks for the opportunity, guys. It's good to be involved with you, and glad I could give the guys an update.
Right. Anybody, thank you everyone for attending. We will publish the video afterwards. And also, if anyone has any follow-up questions, we'll just relay them over to you, Vince. Again, Vince, thanks so much for your time.
No worries. Pleasure.
Bye-bye.
Talk to you soon, guys. Bye.
Bye-bye. Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.